What's up traders, Tom here with another video. Today we'll be discussing this chart and what just happened to the stock market. The Dow dropped 7%, the S&P 500 6%, and even the tech stocks weren't safe with a 4% swing in the Nasdaq. Do you feel like you're floating when you look at this screen? That's because we're in the middle of the Red Sea. Stay tuned. To begin with today, I just wanted to discuss, this is a pretty red screen, but obviously most traders that were trading during March saw these kind of screens. This is never a time to panic. It's a time to always reassess what you're doing, have a plan ready for these types of situations, and understand the way that you want to invest for your future. So to begin today's story, there was literally only one stock in the S&P 500 that finished higher as the plunge happened yesterday, and that was Kroger, one of the supermarket chains in America. Why did all of this happen? I think there's a myriad of reasons, but it's most likely what we've been talking about on this channel, which is sentiment. Just a reminder, make sure to subscribe and hit that bell and give this video a thumbs up if you're enjoying our content, as it really helps out in growing the channel and growing the community. I also just want to let everybody know we do have a trading Discord, links down below, and a pattern cheat sheet for some of the best patterns that we use in trading the markets, all free down below for you to access and join the community. So here's a great opinion piece, and I tend to agree with it wholeheartedly. As many people will be aware, I believe that when everyone believes something, as in they all think that nothing can go down, that is the most likely time when Wall Street will pounce and take money from the retail herd or the retail traders. So pretty much market timer sentiment had been increasing as we saw extreme bullishness was coming into the market, and we have a huge amount of retail traders, more than ever before in the market right now, that literally believe things could not go down. I've said it on this channel, there were people calling me that were 18 and 19 that were interested in investing for the first time, and they were looking at some of the most speculative stocks out there, being everything that's been hit by this current outbreak and current crisis. So it just shows that the mentality of the market right now was never ending, but it doesn't change the facts. And we're going to be looking at those facts throughout this video, and we've got some absolutely amazing information to share with everybody. So let's talk about this Fed balance sheet, which now essentially sits at around $7.2 trillion, and they remain steady on that. I think it's amazing that the trillion is the new billion in what we believe money can do. I would have never thought that we'd be talking about trillion-dollar companies so soon, and more importantly, $7 trillion on the Federal Reserve's balance sheets. As it says here, upwards of 10 trillion before the recession is over, could be even more, could be upwards of 12 trillion from some of the estimates that I've been seeing. And I believe that the Federal Reserve has even more in the tank. Remember, if we look at the other countries that have done quantitative easing, that have done asset-backed purchasing, they have bought upwards of 60% of their entire bond market and still managed to keep everything afloat. So we are in for interesting times over the next couple of decades. News just in about the UK economy. It collapsed by a record 20.4% in April. Again, much of this is already in the expectations and will not factor into the markets due to the fiscal stimulus and other things that are going on, but unbelievable numbers. And of course, there is so many problems in the economies. People know this, and we are in different times, and we need to be adaptable as investors to be able to trade these conditions and invest in these conditions. One of the reasons that people are claiming is, of course, this idea that the second wave has arrived in America. Look, realistically, the first wave never even ended in so many places. People think that you're going to be looking at daily stats. The big thing about this is the market is kind of exhausted on this current crisis concept. We already believe now that the Fed is going to be looking after it. And I think this is really a scapegoat for the idea that sentiment was getting too hot and Wall Street want to get in. And I really firmly believe, at least my opinion anyway, that that's what they do, because they do it time and time again. I keep bringing up bankrupt Hertz because now they want to sell 1 billion in new shares after the stock spike. So Hertz is trying to get some kind of basically backing. I believe they want to sell 246.8 million shares. And we'll continue covering the story mostly to teach investors what happens during a bankruptcy of a share and all of the bad things that happen to shareholders. You'll be surprised how little shareholders often get after bankruptcy cases, or even when the company continues going. Over here in Australia, there is a classic case of that. It's to do with Slater and Gordon, and Slater and Gordon is a lawyer-based firm, and they were on the Australian Stock Exchange. Guess what? One of the best shares. People thought they would never go down, and then all of a sudden they bought a company bigger than them, which is a massive warning sign. I don't like it when companies buy companies bigger than themselves by about 3 times. They are overpaid for it, and within 12 months, they were going to shareholders for extra kind of offerings. And then on top of that, a few months later, they were basically filing. They ended up still being on the stock exchange, but shareholders were split 20-1, and you were basically worth cents in the dollar, not even cents in the dollar per share. So bankruptcy cases, you should learn, always be learning in the stock market, and Hertz is going to be one that this channel is going to learn about together over time. So I promised everybody an amazing stat, and here it is. Here's how the stock market tends to trade after brutal sell-offs like Thursdays. So basically the S&P 500, we're all aware, tumbled around 5.9 to 6%. And this is now its 5th fall of at least 5% in 3 months. So let's see what history has done after S&P 500's performance of 5% declines. Here are all the dates, and I'm just going to circle a few here. We've got the ones from this year. 16th of March, 12th of March, 9th of March, some pretty big ones. This is what the performance is after, but take a look at the back history as well. 2008, look at what happened in terms of the next day. Generally, it is backed up with a positive next day in terms of the market will rebound, and we're seeing a little bit of that in the futures right now. Then after that, actually the next week was generally relatively positive, and certainly the next month and 3 months were very positive across the board when you're looking at the stats. And if you broke all of this down, look at the percentages, percentage positives, 81.48% positive the next day. Then if we look at the next year, 82% positive and 66 and 62. These are better than 50-50 stats that's going to be positive over that next period of time. So just because it crashes or it falls 6% doesn't mean that it's going to continue to do it this time around. Remember, we have the Federal Reserve, and we have a change in sentiment, and we have certain things that have gotten where the bad news has become less bad. We'll keep mentioning that. Bad news, less bad at this time. Saw a few traders in the comment section trading TVIX and others. I will do a video about why TVIX is a little bit dangerous for people to do. If you're in and out very quickly and you have conviction, obviously conviction is the key. I've also seen a few other traders saying that they were holding shorts and that they were happy for those shorts to get out last night, or they were holding because they had conviction, and that's good. If you have conviction in anything you do, then you usually have more success, and that's a big proponent of what we talk about on this channel. Have conviction in your ideas and try to always believe in them. I believe in the concept that the stock market will go up over time. I firmly believe that, and I firmly believe in the companies that we purchase. So if I believe all of those things, then I'm going to be able to hold it, sleep well at night, and be successful over time. Does that mean that sometimes I'm going to lose? Yes, everybody takes a loss, but remember, it's only a loss on paper until you actually have to take it out. The big thing that I believe in is buying quality over time. Always quality. I don't care about penny stocks. They don't interest me because I don't like the risks that entail. Why is that? I've had bad experiences, and I've seen so many people have bad experiences with them. So that's the thing that I've learned about the stock market, is that you have convictions, you believe in your concepts, and you stick to them. So the VIX now is about 37.9, which is pretty damn high in terms of historical. We've always zoomed this chart out just to show how historically high that is. Will it remain up here? Well, as we saw, 80% of the time, the market is positive the next day. So if that remains to be true, then basically we'll probably see the VIX come down a little bit tonight. And then next week, we'll have to see whether the cases get worse over the weekend and people start freaking out. Has Wall Street taken enough off retail traders and enough of a pullback? On the NASDAQ, I tend to think it hasn't. I still think there's a bit of overvaluation on these stocks. I would love it to come back to this 38.2, around that 8,800 to 9,000 we spoke about yesterday. For that to happen, a few people did point out in the comments section, probably the S&P is going to have to drop more. It would probably mean the S&P would have to go to 2,800. Will that happen? We don't know at this stage. We've already got a nice dip in terms of being able to pick up certain stocks. And we will be doing a video probably tomorrow, depending on what happens tonight in the market, talking about a few of our favorite stocks during this next kind of 12 months. So stay tuned for that. Make sure you subscribe for that. And I think that it's a good opportunity, but it's obviously not as good as when you were down the bottom. And if your conviction is it's going to go further, that's fine. I think that this is where you're going to find some support and some buying, and then 23, let's say 1,000 on the Dow, or on the S&P 500, 2,800 would be pretty big buy zones for Wall Street. Because we've got to think, what is Wall Street going to do? Most likely Wall Street is now looking at the buy side and they are looking at the long hold side because they didn't get enough in based on the volume I'm seeing at those previous lows. They also want to fleece a whole bunch of retail traders because they're not very nice people when it comes to that. So the Dow's off quite a lot. Dow's almost back straight into support. If we look here back into 25,000, key psychological number, always going to trade into that. But where it becomes more interesting is really the S&P 500. And this is the one that every trader, every investor should be using. I know that the mass media always talks about the Dow. They always talk about the numbers on the Dow and how it's 1,700 points or 1,200 points or whatever. It sounds great for them, but really the S&P 500 runs the show. The Dow has not run it for a long time. So always look at the technicals on the S&P 500 and then use those technicals for your favorite indice as kind of like giving you an idea of sentiment. If the market was to close here and we were to see this type of engulfing candle pattern, this actually would be incredibly bearish. Look, when we usually see it on the weekly, it really holds true for more further selling. Look at the one over here. Look at the one over here. Whenever this happens, it usually means further selling because a weekly is pretty hard to close. So if that stat of 82% doesn't hold and we got a close down here at around 3,000, that could definitely signal more bearish sentiment and into that 2,800 kind of zone, potentially where Wall Street will be further buying. What are we seeing pre-market? We're seeing around 30.50, so a bit of a pull up, about 1% pull up from the sell-off. We are on the 200 SMA. We mentioned it would be hitting yesterday. Key psychological level of 3,000. And we did get through that 20, which is important. We closed below the 20. So we're stuck beneath a zone. It's very difficult for you to trade this area. But obviously, if you're investing, well, you can use dollar cost averaging and all other types of concepts, which again, we'll cover on this channel over time, to get into the favorite stocks. I mean, you are getting a decent discount. Some stocks were down as much as 12 to 14% last night if they were the ones you were looking at already. So pretty big moves. Hopefully this helps everybody. Good luck in the markets over the next coming weeks. We will be covering them all and having a look at everything. And if you're enjoying our content, make sure to subscribe, hit the bell, comment down below with your favorite share that you're looking at and what price you're looking at getting it as well, so everyone else can see that, if you're willing to share it. And we'll see you in the next video. Happy trading, everybody. Bye.